Hello and welcome back to the View Bitcoin podcast. This is viewbitcoin.com. This is your host, Benaiah Willis, founder of Computational Limited. Active brands are Trend Volume and Love of AI, where we specialize in trading tools and training and also custom code consulting. So if you want any application built, reach out to us. We can code blockchains, we can code NFTs, we can code tokens, we can code generic websites. There's really no limits to what we can code. So just something to bear in mind. And also, if you want trading help, that's what we offer you as well. We can, hold your hand every step of the way. Great time to mention, I'm not a financial advisor. This should not be deemed as financial advice. This is simply my journal where I am expressing what I've learned since being 22 years old and spending 8 years in the market. It's the best part of 80% of my 20s, in the market being exposed. It hasn't been all sunshine and roses, let's say. Many trials, many tribulations, but I am literally the one who walked through the fire and come out the other side. And a wise man told me, your mess is your message. So I'm simply encapsulating my mess, and hopefully you can sort of learn from that without having to waste money or time, which I do believe time is the real essence of God's gift to humanity. And humans have monopolized their greed and made humans sacrifice their time for fiat barter, which I'm firmly against. So when you hear me talk about money and all this jazz, don't get gassed, right? I'm telling you now, it's coming from a space of understanding, and I'm humbled by, the opportunities and the gratitude of the Almighty. You can't take money or God with you to the afterlife. You only can leave wisdom. I believe that's the best thing. Solomon was praying for wisdom and he resulted in being the richest man on earth, right? He got gold, he got riches, but he prayed for wisdom. So that's my prayer. My prayer is wisdom. I just want more wisdom from the Almighty. I don't want money. I don't want gold. You can save all of that. In the Bible, it does also say that in the end days, people will be throwing out and tossing out their gold and silver like it's worthless into the streets. They'll be throwing it out there. So, just be careful where you get your advice from. Be careful where you get your counsel from. Often they should be different places. So today I'm going to wrap off the year. It's been a great year for BTC. We've got 3 days and 12 hours until the yearly expires. Okay, so the monthly and the yearly and the weekly time frame will all expire in the next 3 days and 12 hours. So ultimately, we're going to be looking at the idea of probabilities and statistics in the guise of 4 postulates. Simply put, we look at trend number 1, number 2 is volume, number 3 is momentum, and number 4 is volatility. So these things all marry up to form the picture. Again, I'm going to quickly motor mouth through it. I'm going to quickly blitz through it. Try not to leave you behind. I'm going to try and distill it the best way I can, but I'm just conscious of not taking up too much of your time, because, time is precious, as always. So let's jump into it. Money comes, money goes, but your time never comes back. So looking at this then, we're going to start off with the more mature timeframes, then we're going to massage it into the adolescent micro timeframes. I think the lowest we'll go is to an intraday, meaning the 4 hour, and then we'll piece it together. I'll let you know my base case, and then we'll leave it there. So let's look at the monthly, right? So with the monthly, we do see 3 days and 12 hours until expiry. The Bitcoin bulls are really good, right? These rectangles that you can see on my chart are basically the support, the equilibrium, and the resistance, okay? Better known as premium, fair value, and discount, okay? So again, green is support, yellow is the equilibrium, and the red would be the resistance, in simple terms. So this is based on the hard time fractal analysis. Okay, each candle represents 1 month of price action delivery. So in essence, one candle represents 4 weeks of fiscal price action. Okay. And it looks really good. It looks really, really strong, right? We can see that this monthly candle here is above this green line. Okay, at the bottom, we call this the entropy line. So as long as it's above entropy, that's really good. And we are, so cool. As simple as that. I don't think there's really much else to say. There is 77% buy pressure on the monthly. There is approximately 22% sell pressure. So I like to express that as a tug of war. Okay, pretend there is a red team, pretend there's a green team. The red team have got 22% control versus the other team who have got 77% on average. So it's a game of averages, okay? And at the end of the day, we see who is dominant and we put our money on who is dominant, simply put. And that would be the buyers on a monthly time fractal analysis. So let's look at the other kaleidoscope of time fractals, because to look at one time fractal would be very nonchalant. To say, oh, the monthly's bullish, so it must keep going up. That would be absolutely codswallop and not the attitude that I want to let off. So what we're going to do here is look at the weekly, the daily, and the 4-hour to see if there's any similarities or disparities for that matter. And if so, why so, how so, and what does it really mean for the base case theory? Which I will allude to at the end. I will let you know my base case, which is generally my general summary of everything. So wait until then, you will get the source that you are looking for. So cool, let's look at the weekly then, okay? Firstly, whilst we're on the monthly, I was going to give you my upside resolution here. My max side case is about 48,000, right? Right now we have $43,000, worth mentioning at current time right here, right now we have 43 large. If the bulls wanted to go really exuberant, I don't see much higher than 48,000 this year. So for the next 3 days, I think the very most would be 48 at a push. So if we're to get a measurement tool just to here to there, where we currently are to where we are trajecting, about 12% move. Okay, so the next 3 days, it's there's a slim probability that we got 12%, which would increase Bitcoin per one by $5,884. That's the key take. Do I think it's highly probable? Not really, but it's not the realm of reason. Okay, there is entropy supporting that. So cool, let's leave it there. And the entropy again is this line here. It's not just some random physics word that I've decided to splurt out. Entropy is a serious concept. It's one of the 6 laws of physics, and it's one of the indicators that are available to the Trend Volume members that have subscribed. So this tells you categorically what the drawn liquidity is likely to be. Now, cool, we'll leave it there. Let's look at the weekly. I want to look at the weekly. So looking at the weekly, we were saying that the base case was pretty simple in terms of going into this rendition. We've had 4 downturns on the stochastics, right? So this is where we look at the inertia, okay? And inertia is one of the it's one of the physics laws, right? Shout out to Newton. What's in motion stays in motion till it stops. All right, that's our boy Newton over there. So to govern this, we look at inertia, which governs the momentum of this open market. What we can see here is we had 4 downturns on the stochastic reflexivity, which every time led to a $4,000 deduction. Okay, so we had one in February at the start of the year. We had a second one in April. We had a third one in July, and we had the 4th one literally on December the 4th. So we had the 4th on December the 4th. And this was the 4th pivot towards the downside, which then subsequently would lead to discovery of price action to the downside. Not to say it's a rule of thumb, but history often rhymes, okay? History often rhymes. So if the February cycle is anything to go by, if the April cycle is anything to go by, as well as the July, I would suspect that this December cycle also alludes to multiple thousands to the downside, just as a resolution, okay? Now, to exemplify this idea even further, we would look at the volatility metric that we do see contracting on a weekly basis. So with volatility contracting, with momentum falling underneath $43,557, I would suggest the market is not in slingshot moon mode, as what most simpletons would lead you to believe. Okay, we're not in the business of buying falling knives, not me and my cohort. Okay, when the dust settles, we might reaccumulate and get fancy dancy with it. But at the end of the day, when Tom, Dick and Harry are getting gassed up and buying and getting euphoric, typically we want to be the blokes doing the polar opposite and going risk off, taking defense, rather than an offense approach. That typically alludes us to the right side of the history books. 80% of the market is controlled by human emotion. Be under no illusion of that. This is why we look at human psychological behavior as a proxy gauge for what's about to come. We do not see pivots in the market until we see extremes in human behavior. Okay? So typically when people are extremely depressed, that's when the markets go back up. When people are extremely gassed up and euphoric, typically that's when markets will go down. That is a rule of thumb. So cool. With that ironclad knowledge, we can say to ourselves, we're not buying up here. We are not buying up here at these premiums. That's nonsense. So cool, leave it there. Let's look at the daily. I do think the daily is worth looking at. So looking at the daily, what can we see? We do see, this is the most bearish time fractal, okay? With 11 hours and 36 minutes until today's finished, we are pretty much buggered on the daily time fractal for Bitcoin price action to the upside. Let me explain myself. We've got 80% sell pressure engulfing the market. That means we've got 20% buy pressure. So the tug of war is clearly being dominated by the sell pressure. We can also look at the entropy, which means the typical trend. Price action is underneath its average, right? So if price action is underneath its average, guess what? We're not performing well. And that's not an opinion. That's a simple observation, right? We want to separate opinions and observations when we do our thing. Because when we do our thing, it's very much driven on quantitative data, not what we think or feel today. So again, looking at entropy, looking at the trend, looking at the volume, it's clear that we're fucked. Keep it simple with you. Now let's exemplify it further. Let's look at the inertia. So if we look at the momentum on this beast and the volatility, we can see that everything's basically crashing. I mean crashing. So we've got the relative strength index, which is falling, and it will remain falling underneath $43,400. We've got the MACD, which is better known as the moving average convergence divergence. That also remains falling underneath $43,900. And we've got the stochastic reflexivity, which is also falling underneath $43,891. So the key takeaway is this. Market is falling. We do see everything in tandem. And it's simple as that. Do I go against that? No. It's like being the bloke that went against the tide and died. You know, we don't advocate going against the tides. People in the Caribbean will know it the best. You know, if you're from the Cayman Islands or Jamaica or, you know, Cuba or Barbados, there is an undercurrent, right? You don't go against the current because the undercurrent will drag you out. Do you know what I mean? So we see who is swimming naked when people go against the tide. So that's the key takeaway. Don't go against liquidity. Don't go against momentum, because what's in motion will stay in motion till it stops. Shout out to our boy Newton. Simple. It's one of the laws, and we don't go against that. So I want to go a step further. Elon Musk once said, the only law is physics, right? Everything else is recommendation. And I really will echo that. The only law is physics. Everything else is recommendation. The law of woman and man is broken by woman and man. That's the law of woman and man. It's broken by woman and man. But the law of physics has never been bended or broken by woman or man. Okay, you can't defy gravity. Let's say I climbed out my window, climbed onto the top of my roof, onto the tiles, and then decided to run and jump into my garden. I'd probably break my legs and die. Because why? The grand equalizing force is balance. You know, no man is bigger than gravity. So I just want to sort of lay out these base cases for where we're going with our ideas on the universe and the markets and reality. I believe there is described reality, actual reality, and there is another one, described, actual, and perceived reality, I believe. Anyways, let's go back into this then. So keeping it simple, we're falling, and we keep falling as long as we're underneath 43.9. If we cross back above 43.9, which is the inflection on the moving average convergence divergence, I will be categorically wrong in my downside synopsis, but that's solely contingent on going back above 43,941 approx. Again, that number is right there. $43,941. Cool. So that's it really. I'm not going to be too long today. How long are we into this thus far? Let me just quickly double check. We are approximately 14 minutes into it. That's not too bad at all. So yeah, base case, just be risk off over the next 3 days. I think there'll be a lot of ruckus. A lot of people will get shaken out. Looking at the 4 hour here, we can see that there is 95% sell pressure on a 4 hour time fractal. So the immediate base case would be there is a critical awareness towards the downside. We do see RSI and MACD falling on an intraday basis, and volatility has been contracting, since round about Christmas time. So again, I'd just be careful. That's the key takeaway here. There is nothing really new in terms of fundamental analysis. We do look at the Federal Open Market Committee, which are coming out, I believe, in the new week of the new year. So, there's no real monetary regime to be spoken about until such time. So I do think there'll be a bit of a risk off, a bit of a rebalancing of portfolios going into next year. And people will be harvesting profits on large, I believe. So again, base case is we've got about 13 hours until the year expires. The weekly is not in the best of shapes. We do see the fourth cross down on stochastic momentum. The prior three did all allude to a $4,000 drop each time on average. And then we look at the daily momentum and volatility, which is contracting, and the 4 hour is following suit as well. So, for me, we don't have everything lined up here, right? The daily, the 4 hour, the weekly, and monthly are not aligned to the upside. So that for me would set my bias going into the yearly expiry. And we do have Bitcoin CME futures expiring on Friday. So it does mean there will be a massive deleveraging event, which means, there'll be volatility. Volatility is not direction implied. What is direction implied is the trend, the volume, and the momentum. So on that note, I will leave it there. If you want any further advice or help, head over to trendvolume.com. That is trendvolume.com. You will get full access to me, my team, my algorithms, my indicators, my trading tools, my blueprint, my actual strategy, word by word, step by step. And seek and thee shall find. So until the next one, God bless you. God bless your families. I hope you had a good Christmas, and I will see you on the next one.